All right, everyone. So let's just go over what's going on in the markets and what were the trade opportunities. So one trade opportunity was right here. This pullback just went near the POC and near the breakdown right here. You see, this was the test of the breakdown. This is the breakdown bar, as is this. So the market tested, and when it tested, you saw this pressure, right? So this was saying that at that level there's selling pressure. So the pullback was here and here, and if you didn't get in at these really nice tests, you still had an ability to get in, because the next move down was a rally, which gave a pullback entry right here. So, I mean, here is an entry, here is an entry. If you didn't get this because you thought that the trend is still intact, here it's broken, and this is an entry here. And it basically went here, down here. And where this was the level, I think I explained that I was looking at it for a long, and allowed me to take the long, because you had a change of behavior bar. You didn't have a change of behavior wave, but you had a change of behavior bar. What I mean by change of behavior wave is really big wave. You didn't have a big wave, but you had a big bar, and that's sufficient. If you have a big bar with follow through, that's sufficient. For example, this is the biggest bar in 100 bars and the biggest bar in 47 green bars. So someone's buying this level, and so buying the level, you have evidence of buying the level, so I'm going to buy it too. And this allowed for a really nice pullback entry right here, rallying up, and that's all there is to it. So now we are in an uptrend within the 5-minute, which doesn't mean much, but if I'm right, this could be a trend change back up, meaning the corrective move on the hourly has changed. So I don't know if that's happened, but it makes sense that the buyers are here, and they did start buying. Excuse me. So basically, these are the two trades. One was, pull back to test the breakdown, and here's the selling pressure that came in, allowed for the opportunity. And the second is here, the pullback on a higher time frame to test the high volume area where buyers became active again, causing the change of behavior bar. So what do you learn from this? Again, this basically, I'll go over it. So as I said, there are 4 pullbacks. One is the test of the breakout. This level, usually when you have a lot of follow through. Two is the test of the zone, demand, the supply zone. This is the origin of the rally. 3 is your spring or upthrust, and 4 is the test of the POC, basically high volume level. So these you must always this is it. Where to look for trades, these are the 4 areas. All right, now, unlike most, I'm going to actually show you the logic of all of this. So the test of the breakout, here, you typically have a big bar. So that big bar area, when it gets tested, strong buyers caused the big bar. All right, so strong hands, breakout. The logic is it's all based on strong hands. Basically, the CM. So I was going to say CM. CM did the breakout. Why? Because the size of the bar is too big. It's increasing and all of that. So they're taking. It's them. All right. You're always following footprints of the composite man. So that is one area. The second is the zone. CM green so why this works is because we know that, I mean, if you have green, all that consecutive buying is evidence for the CM, because it's not normal to have green bar consecutively. So that means there's a strong buying. So you're just trying to buy the test of that zone because the CM was active there. Otherwise, you would not have green. Right? You see those bars, they're green. So the idea is they may get active there. 3 is the spring or upthrust. Doing a shakeout. Right? The spring is just a shakeout. And they want to buy the actually of the all right, and 4 is all right. So the idea is, basically looking for the logic of all these 4 is answered by where was the CM act? What the hell? Where was the CM active before in the past, and may become active again. So from my understanding, and a lot of you can see on the chart, the breakout or breakdown, the zone on a spring and on POC. These, I mean, if you guys know of another one, let me know. But this is, I mean, routinely, this is what happens. They're either active on the breakout and because the big bar and gets tested and they come back in, or it's at the zone, you know, supply demand zone or order block or whatever you would call it. That's where all the green came from. So that's evidence they are active because of the consecutive buying, which is being reflected in consecutive green bars, or selling in the red bars on the way down, and it gets tested. We want to see if they're active. Or on a spring when they're doing a shakeout, why accumulate? Why? Because the other side is going to sell, so they can buy, right? Or on the POC, these are the 4 spots. And think about this logically. This is not based on some random pattern. This is based on where was smart money active in the past to see if they're going to be active there again. And if they are, I get in. That's it. All right? I get in with them. This is what you do. This is how to buy pullbacks. This is it. So, yeah, I mean, I don't know what else to say. So this is it, and I'll just show you now examples again and again and again, right? So, let's get rid of all this. I'll show you, we apply all the 4 methods of buying a pullback. Oh, one very important thing. One really, really important thing is this. I know everybody's seen this model, right? But I need to explain things in it that is not taught. All right? First is, if you ask someone about trend, they always say higher, high, higher, low. Okay? This is half the definition. This is half the definition. I'll explain what trend is really what it is and how to execute it. So the first thing you need to understand, because this is the foundation, right? So the first thing is, when you see this model, what do you see? There are 2 things you need to, there's actually 3 things. First is, what are the types of waves that you see here? There are actually 2 types of wave. You know, someone will say rally and pullback, right? There's rally wave and there's pullback wave. So when you need to be able to see on your chart the difference between a rally wave and a pullback wave, or you could call it a corrective wave and an impulse wave, your mind needs to be able to pick up a impulse wave and a corrective wave. You have to be able to distinguish between the 2. This is where everyone, like majority people, they can't do this, or they just don't have the training to see the rally from the pullback. If you say rally and pullback, they get it, but you have to be able to distinguish this on your chart. All right? So why is this important? It is important because the definition of a trend is higher high and higher lows of rally waves, not pullback waves. Higher high, higher low of rally waves. You gotta be able to see the rally waves. You gotta be able to say this is a rally, this is a rally, in order to put your stops and in order to buy the pullbacks. What the market will do is it will mess with your perception of the rally and the pullback by doing something like this. I mean, just take a look at any market. What they'll do is they'll do this and this, Like right here. Look at this. Look at this shit. This is the rally wave, right? This wave after it is not a rally wave. This wave after it's not a rally. It's a higher high. It's not a rally wave. What does this mean? It means this low is going to get taken. I guarantee you, this low is going to get sniped. This is the rally wave. This is the pullback. This is a, I don't know what the hell to call it, but it's not a rally wave. It could be inducement wave, you could call it that. This is another one that's a bullshit wave. So this low is going to get taken. And you'll see, watch. It's going to happen. So you have to be able to distinguish the rally waves from anything else, okay? Because these rally waves will give you the true direction. Rally waves give you direction. The more, give you direction, which you're trading, in that direction. The rally waves give you direction. The corrective waves give you entry opportunities and a hell of a lot of confusion, but it's the rally wave that give you direction. So you have to be able to immediately distinguish. Why? If the rally wave is taken out, if this rally wave, let's say for example, as soon as this rally wave is taken, you have a change of trend. You have a change of trend right here. If this rally wave is taken, you have a change of trend. So I'll give you an example. This was the last down rally wave, right? This was the last down rally wave. Where's the change of trend? As soon as this high is taken. This high is taken, we have a change of trend. And this is why, you see the size of this bar? You see the size of this bar? This is breaking the back of the trend. It's destroying that downtrend right there. Or even this bar was also quite strong. And from the low, this was the biggest in 100 bars, telling me that, trend basically at this level, they're done, corrective trend is over. Now I'm waiting for these guys to get sniped. Anyway, so in trend, right? This is garbage right here. Garbage wave. This is a garbage wave. This is a garbage wave also. That's all garbage. This is a rally, this is a pullback. This is garbage wave, garbage wave, garbage wave. All these high garbage. Then this pullback, and this becomes the new low for the rally, strong low. The rally lows are support. If this market does this, you got a problem. Bulls are screwed. I'm surprised this high hasn't been taken yet. I was expecting this high to get taken. Anyway, so where was I? So in trend, right? Like as a Wyckoff trader, you gotta master the trend, but the question is, how do you do it? How you do it is you're using the wave chart. On the wave chart, in a trend, you have to be able to, step 3, distinguish rally waves. Why? Because they give you direction and support resistance levels. the real support resistance levels that identify where the trend would break. All right, now you go look for yourself. You're going to see this is the truth. So, all right, so when you look at a trend, identify the ability to identify the rally waves, the big waves, right? And I can go into this more and more and more and show you guys like the minutia of, you know, this. There is one other thing you got to know. Actually, there's some stuff, but I can't give it, you know. So this important thing is typically breakouts that have good follow-through become rally waves. Breakouts that have good follow-through become rally waves. So bang, it has follow through, yeah. Breakout, boom, follow through, breakout, boom, breakout. And you want good amount of follow through, okay? So here you have breakouts, they have good follow through, they become rally waves. So breakouts are kind of, for lack of a better word, evolving into rallies. Breakouts, they evolve into rallies. They become rallies. Very important to understand this, that a rally doesn't just, we can talk about how they start as well. Typically, they start from an area. See, I don't want to go into all of this knowledge because it's just too much. All right, so usually they have other characteristics, and this I know because I've experimented so much with them that whatever. They have breakouts with follow through. They also come from corrections. In most cases, they come from corrections that include springs and their tests, or upthrusts and their tests. They have a tendency to come from springs in the like here. Man, I mean, this is already a lower low, so I'll give another example over here, right? You see this rally? You see this rally? It came from an upthrust. You see this rally? It came from an upthrust. This corrective movement. So rallies coming from corrective action, typically from upthrust and springs. This one came in from an upthrust. This one came from a correction here. Boom. This one came from a correction. See the red to white, green. So red and whatever. So that legitimizes the, even this one here, red, boom. White here, and white to red. So from corrections. All right, they come from corrections. For example, a rally, bull rally, will come from a lower low creating the higher high rally. In this case, a bear rally comes from a higher high, internal higher high, which creates an upthrust and then a rally. So they have a tendency to do this, but typically they come from corrections. All right, number 3. The size of the rally is bigger. The size of the rally up wave is usually bigger than prior up wave. And the same thing is true for down waves. All right, now let me show you this. You see this rally here that went down rally? This is the down wave. $713. The prior down wave is only $213. Rally down waves are typically bigger than prior down waves, just like rally up waves are bigger than prior up wave. So this rally up wave is $525. The prior up wave is $150. Same thing with the down wave, it's 713. Prior down wave is 213. So you can see that, you know, they're pretty big. All right. So you can see the expansion in the rally. If it's an up wave, it's bigger than prior up wave. If it's a down wave, it's bigger than prior down waves. The other thing is, for bull rally, the high, how should I say this? The low of the highest bar, is higher than prior two highs. What do I mean by this? This sounds a little crazy, right? So what happens is, the low of the highest bar so we'll just mark this low, is above this high and that high. Look, this is the highest bar in the rally. We take a look at its low, and there is no overlap between prior highs. It is above the prior high and the high before it. You see that? There is no overlap. It totally is above the prior high. All right? So we're taking a look at a real example. The high of this bar on the down rally is lower than this low, and this low. Again, the high of this is lower than this and lower than this. There's no overlap between this bar and the prior two down waves. The high of this bar is greater than the high of these two prior highs. Again, the high of this, the low, man, one second. All right, let me just draw it. Great, it's drawing crazy. Anyway, the low here is greater than that and that. The low of this green bar, the highest bar, is higher than the prior highs. The low of this greater than this and this. The high of this lower than this and this. Done. Just like this one, the low here is greater than this and this. It's left the range. It has left the range and accepting high prices. So this is one of the other key attributes. All right, so I think I've done enough. So what am I waiting for? I don't know what I'm waiting for, but on the hourly, it's all, everything's been tested, right? So yeah, so this here took this, you see this red? It broke the low of the rally, and that's why it's going down. Because it initiated down trend or down correction or whatever. But now we're going to wait to see if this high gets taken. I think it's going to get taken. This green bar is the biggest green bar in 33 bars and 24 consecutive bars. I want to see if they break out above this area. If they break out above this area, chances are they're going to break out above this rally high. So we'll see if it gets pierced, and then it'll offer a pullback opportunity tomorrow. So this is how you track trends. And I'm showing you the way you track trends and trade pullbacks. You gotta identify the rally waves. and their lows and highs to see if they're holding, if they break, change of trend. Now we will watch this to see the first break here, see if it's a breakout, how high. It's probably going to tap resistance, setting up a pullback, and then eventually take out this high, continuing the trend. So we'll see if all of that. All right, that's it. So this is the more meaningful and better examples of trend and really understanding them, because trend is made up of rallies and pullback and other garbage waves. You have to be able to identify the rally waves so that they give you direction. That's how you know what direction to trade in. After that, you get the levels, and there are 4 of them. At those levels, what are we doing? We're just looking for pressure. This was a level up here. Did the pressure come? Yes. Boom, boom, boom. 1, 2, 3, 4, 5 red bars. Change of trend. That's it. The pressure came in. You get in, went down, back to this pullback level. This was a POC volume level. What happened? Pressure came in, went up. So here, what we had was a test of the breakdown, right? You see this breakdown right here? It got tested right there. That's the pullback level. Pressure came in. Here we have a POC, goes up. How do you know pressure came in? How do you identify pressure? Pressure comes in the form of two things. One is this selling wave, or a big wave, or a big bar. In the first case, it came in the form of a big wave. This is the biggest wave in 14 waves. This is the biggest wave in 16 waves. In the second example, it came in the form of a bar. This is the biggest green bar in 47 and the biggest bar in 100 bars. So the pressure will expose itself based on, in this case, based on distance. You could also do it based on volume. Typically, it's either price or volume, and this one has. I just do it based on distance, but you could be doing it based off of volume as well. All right. That's all for today. Thank you. Have a good day. Bye.